Hi there. Are you trading in options? If your answer is yes, you might have traded in Nifty options, Bank Nifty options, Fin Nifty options. Especially with every week there has been expiry of these indices, there are a lot of traders who are jumping to options buying as well as options selling. Now with VIX going down, you might have observed that option selling has become very risky, especially in indices. However, on the other hand, stock options provide a much better return on your investment as well as more stability and hedging options, as the premiums there are very high. Now you might have certain questions like, there is no liquidity in stock options, is stock options safe, there are very wide whipsaws in stock options, so forth and so on. To answer all of this, I am creating this video where we are going to compare the percentage return on investment of your principal deployed as an option seller in index vis-a-vis stocks. Let us compare the yield on our investment and then come to a conclusion whether in the present scenario trading in index option is safer or trading in stock option is safer. Also, which will return more yield on our investment. So let us dive into an Excel sheet and do all of this. Alright, so since trading is also a business, it is very important to understand the return on investment and the probabilities before we take the trade. I want to give you a simple example, and then we will also learn how to identify where exactly do we have a highest probability and a highest return on investment. To begin with, and to calculate this on your own, you just need two things: a simple Excel sheet and your broker demat account. I am using Fios in today's example. In fact, the link to open an account in Fios is given in the description. So for example, let us say if I choose Nifty, the price of Nifty right now is 22,133 or 134. Let us say I'll pick futures, May futures. The price is 22241. So 22,240 is the price. So the at the money call will be Nifty 22,250. Now I don't want to focus on weekly contracts. Let us talk about monthly contracts. This is the monthly contract. 24 May 30. 24 stands for year, May 30 stands for 30th of May. If I see the call, the monthly call right now is at 287 rupees. Let us just write here Nifty ATM is at 287. 287 is the premium. Lot size is 25. So if I sell this call, the maximum money that I can make is 287 into the lot size, and that is 7,175. This is the max profit that I can make. And let us calculate the investment needed. To calculate the investment, I'll just try to click on sell, select invest, and it will show the margin required, 72801. So investment will be 72,801 rupees. So when we calculate the return on our investment, ROI, max profit, divide by investment into 100, and that is 9.8%. The maximum return that I can get on my investment is 9.8%. But let us look at some volatile stocks as well. For example, in our case, it will be PFC. Now, PFC futures is at 430 rupees, 430. So I'll select PFC 430 call, which is right now running at 19 rupees 50 paisa. So PFC 19.3. Let us look at the lot size. Lot size is 3875. 3875. The maximum profit that I can make is 74,000. However, the investment for PFC will be 5,39,000, 5,31,000. So let me mention that here, 531,000. and the return will be 14%. So what you see here is, if I invest 72,000, I make maximum profit as 7,000. If I invest 5 lakh, the maximum profit that I make is 74,000. So in one case, the return on investment is 9%. In other case, the return on investment is around 14%. This is when we're talking about ATM. So let us try to go certain percentage ahead. For example, Nifty is right now at 22250 and PFC is at 430. If I go maybe 10% OTM, so 10% of 22250 would be somewhere around 24,475, 24,475. 10% of 430 would be 473. So on one side we'll have around 22,500 call. On other side we will have, let us say, maybe 475 call. So 24,475, so 24,500 call. On another side I would like to have 475 call. So let us look at the pricings. So 24,500 call, Nifty 24,500 call is at just 5 rupees, right? Is just at 5 rupees. So your return on investment is 0.17%. Let us look at 475 call. It is at 5.4. Your return on investment is still 4%. The reason I'm doing all of this drill is to explain you that since IV is low for index and IV is high for stock, your return on investment on stock options would be better than on index option. Assume market is at 22,250, you're bearish and you want to short FAR OTM call just to be on the safer side. If you go 10% OTM, you'll just make 0.17%. But on the same stock, if it is at 430, even if you go 10% OTM strike, if you short the call, you still make close to 4% yield in a single month, right? So this is one such example. In fact, what I've done is I've created a Python code. This Python code will actually scan all the FNO stocks and tell you which particular stock has the highest return on investment. Let us look at that. So I just have to double click on this Python code and now it has started. What it will do is it will calculate the LTP of all the FNO stocks, find the ATM call, find the ATM put, combine the premium, calculate the yield and tell me which particular stock has the highest volatility and has highest yield on my investment. It's done. Now I'll just click on this and a web page would open up. Here I can see up to 100 entries. These are all the stocks with their lot size, with their LTP, percentage of LTP, premium collected. I can even do the sorting. If I want to see which script has the highest yield, I can just click here like this and I can see right now BHEL has the highest yield of 9.6% for call and put combined. Let me give you an example. So we'll go to BHEL, BHEL, BHEL. BHEL is right now at 280. So I'll do the same calculation here. BHEL is at 280 and if I want to do 10% calculation, so it becomes 308. So I'll try to calculate 310 call. So let me go to my broker terminal. BHEL 310 call is available at 4 rupees 90 paisa. Now it is at 4 rupees 75 paisa. So let me write 4.75. Also check the lot size. Lot size is 2625. Margin needed is 1.75 lakh. I'll write 2625 and margin needed is 175,000. So the maximum profit that I can make is 12,000. and the maximum return on yield is 7.125%. So you can notice that even if I short 10 strike far call or 10 strike far put, I still make 7% on my principal. So this Python code can help you identify which script has the highest IV, which script is going to give you the better yield. It will also show you the historical premium. For example, in the case of BHEL, it was 29, 29, 28, 29, 29. It spiked up a little bit, 31 on 3rd of May, and then on 8th of May it is again at 29, and today it is again at 27. So there's no major spike, meaning there is no abnormal activities happening. So looks a normal script where premium decay can happen if nothing major happens in this particular script, right? So this way you can actually see and calculate the yield and understand which scripts are going to give you better return on your principal. Sometimes when we do the analysis, let us say I am bullish on a particular script. I want to maybe short a put, but if my analysis goes wrong, I need to know till what point I am safe. After that, how much loss can I make? And if my analysis goes right, what is the max yield that I can generate? In the case of, let us say, BHEL, where if I am, let us say, bearish instead of bullish, and if I short 10 strike OTM, 10% OTM call, that is 308 or 310 call, short call, BHEL is at 280. So even if it goes till 310, more than 10% against me, I'm still safe. And upon that, 310 call is having a premium of 4.75. So my break even is 314.75. So even if BHEL reaches 314.75, I will still not lose money. Anything above that, I'll start losing money. And if my analysis goes right, or even if it goes partially right, if BHEL stays below 310, 4.75 will become 0 and I'll walk out with 7% returns on my principal, right? So this is how you calculate the return on your investment. This is how you identify the opportunity. This is how you calculate the probability of going in your favor, right? And you can do all of this using this simple Python code. If you want this Python program, if you want this application, the link to purchase this program is also in the description. Anyone who opens an account with us in Fires gets flat 50% off on the pricing of this particular Python program. So I hope today's content has helped you learn something new, something interesting. If you found it useful, do like, share it with your friends and family, and I'll see you in next video where we will discuss something even more interesting. See you in the next video.